The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I will be speaking about EURUSD. As usual, I will be performing a complete multi-time frame top-down analysis. First, we will be covering the technical aspect. Then we will go and see what we have from an order flow perspective. So commitment of traders, which is basically what hedge funds and the non-commercial, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. We also just started the Black Friday month. The link is in the description. You have a massive discount, plus you have the possibility to get a full refund of the mentorship program price directly in your trading account, since we have partnered with Blueberry Markets. So make sure you go and check that one out. Now, starting here on the monthly time frame, what do we have? Now, here on the monthly for EURUSD, we have a market which has just created an M pattern. Now, we can see the move to the upside, move back down, green candle, and then move back down. Now, in general, after the creation of an M pattern, you want to see a short-term move to the upside for the completion of the pattern and retest of the previous support and resistance before then seeing the continuation to the downside. Now, in this case, the previous support and resistance is a very big area. In fact, we can see how exactly from here the market had started all this move to the upside, again from here, meaning that all this area was an extremely strong area of support and demand that now that the market has broken it to the downside from a monthly closing perspective is very strong resistance and supply. So if the market will create a pullback back inside of this area, we can then expect a rejection to the downside. So from a monthly perspective, we can expect short-term bullish price action before then a longer-term continuation to the downside. Dropping down on the weekly time frame, what do we have? Now here in the weekly, we have exactly what we usually expect in a situation like this. You have a strong impulse to the downside that breaks below a previous low. At that point, after the break, you expect a retest of this previous support and resistance and a rejection to the downside. And we can see that that is exactly what the market did. Also important to point out that in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how the market here has also retraced exactly to the 0.32 of the Fibonacci taken on this weekly impulse, which was lining up with this previous support and resistance, creating a very strong layer of resistance here that we definitely expected the market to reject to the downside. At the moment, the market is holding it, basically rejecting the previous support and low that the market had printed here on the weekly time frame, but we could expect the market to manage to break below it. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now, here in the daily, I spoke about EURUSD a few times in the past. I spoke about it when the market was around this area. I made a full breakdown explaining all the reasons for which we expected this rejection to the downside. From here, I made another breakdown explaining all the reasons for which we expected this rejection to the upside, and that is what the market gave us. Then after this impulse, I made a full breakdown explaining all the reasons for which from here we wanted to see first a rejection and then the continuation to the downside. And again, that is what the market gave us. And then from here, I made another breakdown explaining all the reasons for which we expected this rejection to the upside. And by the way, I will link all this previous analysis in the description, so you can go and check it out for more free education. Now, at the moment, what we can see here is that we are testing previous daily support, which is now turn resistance here. Now, it's quite clear that this correction has been very strong. So in a situation like this, looking immediately for a move to the downside can be very risky. But let's first see what we have from a COT perspective. So basically what the non-commercials, so the big players and speculators in the market are doing. Now, what we can see here is that the net positions have been dropping lately. In fact, we went from having 26.3k net positions, so from having more longs than shorts from an institutional perspective, with 189.9k longs and 163.5k shorts, all the way down to having a negative net positioning, meaning that currently we have more shorts than longs, 205.4k shorts and 193.3k longs. So the euro has been getting weaker in the long term, and we have already seen that from a technical perspective. We can expect more continuation, but since this rejection has been very strong, looking immediately for a move to the downside can be extremely risky, because after such a strong rejection, the market could easily manage to break above this resistance, which at that point would trigger a deeper pullback from a weekly perspective. So the way in which we will be approaching this with students is as usual being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So if the market will remain in such bullish state from an intraday perspective, we will not be looking for anything, because this market will easily break resistance. However, if the market inside of here will shift and show a deceleration, is shifting from an intraday bullish to an intraday bearish market, at that point we will be adding EURUSD to our watch list, and if the market will provide to us one of our valid entries, we will be looking for a potential move to the downside with a good risk to reward and good probabilities at that point for the creation of a potential lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.